JB here. Hope everyone's doing outstanding. Wednesday, September 24th, 3:31 on this fine afternoon. Really quick rant. Talk about the market, some names I'm looking at. Go from there. S&P future, well, not futures. S&P in the red, down about a third of a percent here. Been chopping around. Noon hour hit lows. The SPY actually broke 660 for a split second, and then has been chopping around this 660, 661 handle ever since. Uh, no crazy news or catalyst, right? We had Fed Chair Powell yesterday, MU earnings after the close yesterday, and then tomorrow we'll get the GDP revision, we'll get weekly jobless claims, PCE data on Friday, and outside of that, it's somewhat of a news vacuum, right? So, um, talk about some of these things I'm watching. To me, the first is the yields, right? So don't want to see the yields continue to creep higher. Uh, they're actually in the green here today, and actually about 245 yields hit highs. But then on the flip side here today, the VIX is down 1%. So uh, I don't know. Then I look at my watch list, and it's like 60% of the stocks on my main watch list are green. And then there's quite a few that are up 2-3%. I mean, Lululemon's up 3% today. Um, AutoZone, Ulta, a lot of like the consumer discretionary names, I guess you would call them. Um, and then on the flip side, some of the names, Apple, let's see here. I didn't pull up the most recent ones. Yeah, well, Apple's giving back 1%, Google's down nearly 2%. Meta's slightly in the green here. So tough to me again. It's like you make the case that the markets were all-time highs, just consolidation, some I wouldn't call it rebalancing or repositioning, but just that's kind of what it feels like here today. No crazy sort of like to me, if the VIX was soaring again, uh, and then yields were soaring, and then the market was finding more pressure into the end of the day here, I'd be a little more concerned. But for now, just kind of still in cautious mode. Actually, earlier today, I was looking for names, and you'll hear me talk about this for a while. I do apologize for calling this what's going on with the capex and AI and all this the circle jerk. But to me, I think those are the names that I'll be looking at for potential hedges or put positions if when things accelerate a little bit. And I was looking at Broadcom today, and I almost pulled the trigger on some 320s. They were like 50 cents, 55 cents. And then boom, all the way down to 338 in the morning, and then bounced and then down to 336. I almost pulled them in the afternoon when the SPY was trying to break or hold that 660. Thankfully, sat on my hands. Definitely a name I'll continue to look for opportunities. Broadcom, and then what was the other one? I was talking about SanDisk this morning. Um, that's down 7%. Tough to find a decent risk reward put strike on that because the spreads are it's somewhat illiquid and spreads are wide. So for now, I don't have a ton of call positions on, so it's not like I'm protecting a lot of positions. And then some of the names I'm in are of the small cap variety. So even on a day like today, and then unfortunately, SERV, which was in the green and solidly in the green earlier, just went into the red. It's one of those days where I'll just sit on my hands, right? So that's kind of the overall market. I talked about 667 was the upper Bollinger Band, and then 660 is support. And sure enough, we got right to that 660 handle, and then we've kind of held pat there. So we'll see what tomorrow brings. Why don't I have my SPY chart up here? I don't know what's going on here. All right, well there it is. That's kind of the overall market. Sorry. I had that little thing this morning around the Market Watch article. I'm not going to do on a rant on that. But just on a side note here, Star Surgical, right? I made a list. So my top 5 stock webinar, and this year I haven't traded. I don't even know if I've traded the names this year in regards to the top 5 stocks. But one of the trends of my top 5 stock webinars since I've been doing since 2014 is the amount of stocks that have been acquired, and it was like 25% coming into this year. And then in March, Redfin was acquired. And then Star Surgical back in August getting acquired by, I think it's by Alcon. I don't know if I talked about this last week. Alcon used to be one of my favorite stocks back, I don't know, it was 10, 15 years ago to trade on the option side. And they make lenses and things like that, more eye care stuff. And then they got acquired by BHC. Well, BHC was, oh gosh, now I'm having brain fart. Citron Research's Valiant Pharmaceuticals, right? The whole big, uh, his name that brought him to infamy, right? The big short that he had, he called it out, and the stock went from $300 to, we know the whole story there. But they acquired him, and then they actually spun him off. Um, and now Alcon just acquired Star Surgical. So Notch, another one of my top 5 stocks have been acquired. All right, rants for other days. All right, so just quick on individual names. One of those days again, I'm kind of sad on my hands here. It's a Wednesday. Some of the weekly options typically, if you add them on Monday, the premiums start to accelerate in regards to erosion on Wednesday. So kind of one of those days I've kind of been sitting on my hands. But I did just add some GLD puts. Yeah, I tried the GLD puts last week, and I was actually I went too close, right? And I think I had the three, I had the ones that expired this week, but I closed them flat last week when gold started reverse. I got them into the Fed meeting or some follow through after the Fed meeting, and that didn't pan out, so I closed them flat. And then you watch again today, and it's like I think that 3,700 handle on gold. Uh, let's see here. I don't have it pulled up on. Sorry, I'm having. Okay. I think that's like a magnet here, and then we'll see if it gets 3,700 tomorrow. But when I was getting those puts last week, I'm like, I should have went out and got the October. So finally, I think it's a good opportunity to try my hand again on this pull. And yeah, I'm not playing for gold to go back to 2,000 or to 3,000. I just think there's an opportunity at some point. There's going to be some volatility, and a lot of the options when you trade gold, option market's not pricing in a 4, 5, 6% pull on gold in a very short period of time. It's pricing in a 1% weekly move or something to that effect. So when it has outsized moves, not only if it goes in direction, you make money just because of the directional move, but also because the implied volatility goes up. So when got those puts, I'll hold those. Hopefully I'll get an opportunity to lock some in to cover costs tomorrow or Friday. And then, I have time. And, if things accelerate on gold, I'll look for more opportunities to add some more strikes. But, I'm not going to go on my whole rant on gold. I've done that for many years on why I just think at some point, gold loses its luster, but I've been wrong, right? So I could continue to be wrong. One of my bear case on gold is that once we become an interplanetary species, gold is going to be on meteors and it can be mined elsewhere. It's not a finite resource anymore, right? So funny stuff. I'll keep that to myself. But anyway, I just added those GLD puts. That was the thought process there. I think you take a look at GLD 330. I think that's an easy target. And that's only 2 weeks ago. So not saying just because it hit 2 weeks ago that's where it's going, but it just kind of helps keep in the context. I don't think it's far out move to get, even if it gets to 330 to 320s. If that happens in the next couple of days, 320s will be up a couple 100%. So thought process there. That's GLD. Cardlytics finally back into rally mode this morning. Citron Research, he came out with his piece on it. I think it's 12 reasons why he's bullish Cardlytics, and it's almost I would say it's comical, but he could have made 6 reasons and combined some of the 12 reasons he did because they're very similar in context in regards to the mode around the business and the visibility the company has in regards to being able to monetize and some comparisons and things like that. But it's all like I just said earlier last week, I can look at Cardlytics and see it at $10 next week, and it wouldn't surprise me. I say, okay, decently valued and probably still some opportunity for upside. Whereas I look at a name like Open, and Open's running here today. I hope, if you're long Open, good. I hope it goes 20, $30. I hope they disrupt the real estate sector. That's just a name that a lot has to go right for it to be where it's trading right now, and a lot has to really go right for it to trade substantially higher. So Cardlytics, I don't think there has to be too much that goes right with it in regards to its earnings and things like that, where it could trade at $10. So I was looking at other strikes. I'm just going to continue to hold my October calls. I still have the 4s and the 3s, so I'll just continue to hold those. Already locked some of the 3s in to cover costs for 100%. Last week, I'll continue to hold those. Duolingo, frustrating, right? I get the calls yesterday and, well, actually Monday as well, but I'm running those free too. And it's pretty much flat as a pancake. I mean, it's been volatile for the last couple of weeks, and especially in the middle of August when it did its dive from its earnings. And now it's trading in a range, tight trading range. It was trading on Monday, it traded this range in the first 5 minutes of the day, right? It's been stuck between 298 and 300. So maybe that's a sign it's going to break out tomorrow. Consolidation just needs a little kick in the butt. Still have some hope there for my calls there. Edit. I don't have to go look to see when I got those edit calls, but I'm riding edit January 26, $5 calls, freebies. I've been holding those for a while. Got all the way up to 322 or so back in July, I think it was, or August. Back in July, then sold off. Back up to 320 and change back in August, sold off. And here it is, trying to repeat. And I think maybe this is the time it breaks out. So I'll just continue to hold those. I was looking for more strikes, but unfortunately, I think you go into January's, it goes from 5 to 750, so a little more difficult to play. But the thing is, my calls, they're freebies, but they're back to flat. And were they 35 by 40? Oh, no, now they're solidly in the green. So they're 40 by 50. So, if I wasn't in, maybe I would have got the $5 strikes again. The 750s are 15 by 20. Here's the thing with edit cash position. You know, I, another, I'm not saying with Cardlytics saying it's $10, but you look at edit, and edit used to be one of my top five stocks. I don't know what year that was, maybe 2017, but it's a great name in the space. There was that acquisition. I forget who did, was it LLY? Someone bought out one of those. GameStop's pulling back a little bit. But there was a valuation, I think it was like 1.8 billion, and you just do the math on edit and like, okay, edit could be a $15-$20 buyout acquisition. So all right, rants for other days on edit. Sorry, I'm going a little too fast here. Reddit. So another tough one, all the way down to 237 at 10 o'clock, bounced up to 243, and it's kind of been chopping around ever since. And I was looking, I'm like, oh wow, the 260s look interesting. I just don't want to be in a spot where I'm catching a falling knife. So I'll continue to be patient, maybe tomorrow, but at some point, and you look at the chart on Reddit, even though these big pulls the last 2 days, and not including today, the chart still looks pretty interesting on a risk reward basis. So I'll continue to look for opportunities for some lottos on that one. Why don't I have my charts? Haven't. Okay. Oh, and then here's Broadcom, right? So not saying that this gap gets filled and below, but you take a look. Oh, Peloton's going. Nice little candle. But it had its earnings gap all the way up to 330, got up to 370. It's pulled ever since. So could be interesting if the SPY doesn't hold 660 tomorrow, and then we get continued weakness. Those 320s certainly interesting on Broadcom. What else? SERV. I don't even want to talk about SERV today. Looked like it was going to break through up to 14. It's holding 1375 like a champ, and then boom, dollar reversal. Just frustrating. Similar, trying to find decent strikes to add for further upside right now on SERV with the volatility just doesn't make sense. So I'll continue to be patient there. JOBY, same thing. I'm knocking on the door 17 yesterday and today, and boom, it's down at lows here, 1592. I'll continue to be patient. And then last but not least, Nike. They have earnings next week, September 30th. Again, another one of those names. You look at what's happened with Lulu and some of these other brands that kind of lost their luster. And I use the analogy that Lulu was kind of becoming what Under Armour was, right? Under Armour used to be this sexy name in apparel and fitness, and then it just lost its luster. And I'm not saying it doesn't still have a brand value to it, but it's not what it used to be. And not saying Lulu has lost that yet, but I think that's some of the reason why the valuation of the company has come down, because it doesn't command the pricing power like it used to be able to. Whereas Nike, it's like Nike is, if there's an example of a company that's able to keep pricing power and its brand, it's Nike. And to see it still trading down here with new leadership stuff, I think I don't know if it's this earnings, but maybe tomorrow I'll look for some strikes to play for that, for premium build into earnings next week. Anyway, I'm losing my voice here. Let's have a great day, folks. I'll be back. Rock and roll.